In this video, we're going to talk about what day trading is and then why trader psychology is such an important factor in being successful with day trading. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time day trader. And I'm basically at the stage now where I've set up my brokerage account and I'm studying options and I'm going to study technical analysis over the next few months. So if you're brand new to day trading, you can download my 6-month blueprint that outlines all the steps that I'm taking in the first 6 months. And you can find that below this video. Now, I'm a few months into my journey and now I'm sort of making some content about what is day trading. And the reason why is that I've sort of had a few months of studying day trading to be able to kind of answer this question a bit better. And what has come up so often in these first 3 months is this whole, trader psychology sort of point or, part of this whole journey. And it just is such an important factor. So that's what I want to talk about in this video. What is day trading, but then why trading psychology is such a big part about this profession. So let's jump right in. And what I thought we'd do is we talk about what day trading is, talk about some personality traits that seem to come up a lot with day traders. Certainly, something that might relate to you. It's not a set in stone thing, but certainly there are some common traits that come up. And then we're going to talk about the first chapter of one of the most popular trading psychology books that you will probably end up getting and listening to. And I thought we'd touch on that for the psychology part. So, what is day trading? If we kind of look at like a basic definition, day trading is basically trading. So you're buying and selling some sort of financial security. So stocks, bonds, ETFs, futures contracts, commodities, or on the Forex market, currency. So we talked all about those in prior episodes. But basically, if you trade those and you sort of trade them within one day, then that is considered, day trading. That's sort of like the definition. So, a traditional day trader will close out their positions before the end of the day. So you might hold a trade for a very short period of time, maybe, a few seconds, a few minutes, or by the end of the day, you would basically sell or, end a position that you have with these financial securities. So traditionally, or, in the strict definition of day trading, you don't hold any positions overnight. So you don't have a risk of, your stock, trading or fluctuating after hours. Now, there are day traders that also do what's called swing trading. And that is, swing trading is where you hold, stock, for example, for maybe a few days or a few weeks. So, it will depend on your strategy and maybe what the market is doing, whether, some of your day trades might turn into swing trades. You might hold them a bit longer. And then maybe your specific strategy. There are some day trading strategies where, people would never hold a financial security, a stock, for more than one day. You'd be buying and selling within one day all the time. Whereas there are other strategies that might, make you swing trade a little bit if, that is where the market is going. So just keep that in mind. But, for definition, purposes, day trading, you are trading within the one day. Now, obviously, that's not a good enough definition to really understand what day trading is. So if we dive a little bit more deeply here, day trading is a speculative trading style where the goal is to profit from short-term price fluctuation. So when I was first kind of looking into this, I come from a background where I've just invested in some stocks for the long term. So I hold some positions that I don't trade, I don't plan to sell unless I need the money. So if you come from that sort of mind frame as well, then, day trading at first, might seem, quite new. It's very different from traditional investing. It certainly is not investing. You are dealing with, financial instruments, but you are not the same as an investor who holds onto positions for the long term. So, the term speculative trading style used for day trading in this context, it refers to an approach to trading that's primarily focused on attempting to profit from these short-term price fluctuations in the stock that you might be looking at. So unlike, long-term investment strategies that rely on like the fundamental analysis of a company's performance and growth, Speculative trading involves making trades based on predictions of immediate price movement. So again, day trading, it's not the same as traditional investing. So if you are like a great analyst, where you can sort of find good investments that will pay off in the long run, it certainly does not mean you're going to be a good day trader. They are not the same thing. And again, most people, they know what investing is. And even if you sort of might tell, someone, your family or friends, hey, I'm looking into day trading, they might want advice on, what stock to buy, and so on. And it's because they think day trading is investing when it is certainly not the exact same thing. And again, most people, they know this idea of buying a stock and holding it for the long term, and then the value goes up. Or just think of investing in real estate where you buy a property and it matures over time. Again, day trading is not the same. So some key characteristics of day trading, again, we talked about this short-term focus. Day traders engage in transactions within the same trading day, aiming to capitalize on price movements that occur over minutes, hours, or throughout the trading session. And this speculation comes from attempting to forecast these quick changes in the price of a security. Technical analysis and market signals. So the style of trading, it's going to rely on technical analysis, which includes studying charts, volume, so how many people are buying and selling the security, moving averages, and then there's other indicators that will predict future price movements. And traders also pay attention to news, events, and the market sentiment at large. And then trading also requires discipline and focus. So successful speculative trading, it demands this high degree of discipline to stick to your trading plan, focus to monitor the markets, and a solid understanding of market dynamics to make these quick, informed decisions. Again, if you're trading throughout one day, you got to be quick and you have to be decisive. So this kind of leads into some personality traits that are probably quite common among people who day trade. So discipline, independence, and decisiveness. So first off, discipline. If you've downloaded my 6-month blueprint, you'll get an idea of what we cover in the first 6 months. And right away, first of all, you need discipline to be able to study a lot of these things before going in and making trades with real money. So, you need to get a good background of the financial markets. You need to study and understand how to buy and sell stocks. You need to open up a brokerage account and maybe learn what options are. And then you need to study technical analysis, which, if you're new to day trading, you've probably never really looked at that. So there's all sorts of things to learn. And the only way to do that is to be disciplined and to sort of, day in and day out or every week, study. So you need to be disciplined. But when you actually start trading, what has come up a lot in, my beginning venture into day trading is that discipline is a huge factor in having your trading plan and your strategy and then sticking to it. So you need to, start your day with a routine. You'll journal and you track all your trades. And then, you need to be able to take profits and cut your losses in a very disciplined way with, no emotion. And that is a big, big factor with day trading. And that's certainly a trait that a lot of successful day traders will have. Now, the other thing is, independence. Personally, I like working alone. I built my affiliate marketing business. The only contact I had with other people was through email. I think there is an independence part to day trading. You're going to be, looking at a computer screen, analyzing charts, and you're going to need to stay laser focused, and, be in the zone, so to speak. So, having that independence or being able to do that at least is certainly, I think, something that's going to be important. And this idea of independence has come up a lot in the studying that I've done. And then decisiveness. I think, we all know those people that just can't make a decision, whether it's about what to eat tonight for dinner, or if some people may have complications with social interactions and they're wondering, what should I say? If you, need to get a second opinion, you're probably not going to be a successful day trader. You need to execute your trading strategy in a timely manner and be confident. And you can't, if you can't make these decisive decisions, then you probably won't be good at day trading. And it seems like day traders are very decisive, especially when they're successful and they have their trading plan in place. Now, the other important trait that seems to come up all over when you're looking into day trading, as I have been over the last few months, is this whole notion of having a strong mindset. So that leads into the last part of what we're going to cover in this video. And it's just like this question: why does everyone talk about trader psychology? And I thought the best way to sort of cover this would be to review the first chapter of this book called Trading in the Zone by Mark Douglas. It's very popular. You can get it on Amazon. Personally, I have the audio book version, and I've gone through it a few times, and I sort of just continue to listen to it when I'm working out or driving. And you will have this book recommended. You can go to Amazon, you can buy it. There's a link below this video. It seems like everyone has this book, and for a good reason. And the reason is that there is such an important factor with your trading psychology when it comes to day trading. So in terms of what we're going to cover here, I thought that I would just do a summary of the first chapter, and some of this stuff is based on my personal notes. And then I am going to take sort of direct quotes from the first chapter of the book, and I'll try and do my best to tell you exactly when I'm reading from the book. But again, I would recommend you go buy this book. It seems like everyone who does day trading has this book. And it's for a reason. It's really good. So the first chapter, basically what it does, it provides this argument for the psychological aspect of trading. So it suggests that technical skills alone are insufficient for success. Instead, you need emotional intelligence, a disciplined approach to risk, and then a deep understanding of one's psychological responses to the market's ups and downs. And that is truly going to set successful traders apart. So the first chapter, the author there, Mark Douglas, talks about some of the evolutions in trading strategy. So he says that sort of trading has evolved from only relying on fundamental analysis, which again focuses on like the intrinsic value of a company, to technical analysis, which predicts price movements based on past patterns. So that's a lot what you're going to be doing with day trading. And then now this whole mental analysis. So this shift emphasizes the importance of the trader's mindset in achieving trading success. So technical analysis became popular because people realized that you can't make money consistently by only focusing on fundamental analysis. So again, fundamental analysis is based on the model that factors in many things, and it comes up with a price a stock should be in the future. But Mark says that these models don't factor in people as variables. And one of the quotes he has, he says, if people don't know about the model or they don't believe in it, then the price won't go up. So if we just kind of go off on a tangent here and talk about something that's happening in the market right now, I'm personally a Tesla investor, and I have been for quite a few years now. But over the last few years, the price certainly hasn't gone anywhere. And at the time of recording this, it's going down. Now, it's funny because if you look at what some successful technical analysts have said over the last few months, is that in 2024, they predict the stock to fall to a low in the spring and then bounce back. And that's sort of the pattern we're following exactly. But if you look at people that don't do technical analysis and just do fundamental analysis, some of these Tesla bulls, they have great content. And I personally, believe a lot of the Tesla story. And that's why I'm a long-term investor. And again, this is not financial advice, but Tesla have so many things happening in the next few years. They've got the best-selling car last year in the Model Y. They have an energy business that has not quite hit the books yet, but their energy storage business is ramping up, and the margins are going to be great. They're coming out with a $25,000 car probably next year in 2025, which is going to be huge. Their full self-driving is making so much progress, and it's just a matter of time before that is a real thing. Then they have their play on the AI. Artificial intelligence is very, very advanced with what they're doing with their cars. And then they've got this humanoid robot, which, in the next 5 years could be huge. So, in the future, I personally feel that the fundamentals are great. And so many other people that study it really closely know that Tesla's manufacturing excellence is above, every other company out there. However, the stock has been flat and it's going down. So if people don't know about that, many Wall Street analysts don't know about all the great things Tesla is doing, or they just don't believe it, then the price won't go up. Excuse me. So there is a perfect example where with fundamental analysis, even if we just assume that this fundamental analysis is correct and Tesla is going to be a great company in the next few years, the stock has gone nowhere in 3 years. So the technical analyst knows that there are patterns that repeat themselves and can give a greater probability of something happening over another. And the technical analysis, it looks at what the market is doing now in relation to what it has done in the past, instead of focusing on what the market should be doing based on what is logical. So that's more fundamental analysis. And that's why, if you held Tesla for the last few years, it hasn't really made you any money. So there are more opportunities to make money with technical analysis. And that's why it has been adopted sort of in the 70s, I believe, when it was finally became popular. And because, you can make more money if you, certainly you can make money by holding stocks long. In the long run, you always will. Generally, everything moves up and to the right. But for technical analysis, there are just so many more opportunities. Again, if you held Tesla for the last 3 years, it's been flat, you haven't made any money, but there have been so many more technical analysis opportunities within the whole market that you could have taken advantage of if you knew how to do it. So Mark, explains that, and then he poses this question, yes, there are many more opportunities with technical analysis, but can you take advantage of these opportunities? And he explains that there's this psychological gap. You might know what to do, but can you actually put on those trades? And again, from my personal experience here, from someone's who's transitioning from an investment mindset where decisions are based on these long-term potentials of the company to a beginner day trader, it's going to be essential to understand that the focus shifts dramatically with day trading. The immediate price action, so what's happening in the price right now, and the market sentiment take precedent over the fundamental strengths or weaknesses of a company. And again, looking back on past patterns in charts and things of that nature. So this shift, it doesn't eliminate the value of understanding a company's fundamentals, but certainly highlights that with day trading, success is determined more on mastering technical analysis to navigate these short-term price fluctuations and develop a resilient trading psychology to make decisions without any emotion. So that's going to be important for me as a beginner day trader, and maybe if you're a beginner day trader as well, is sort of shifting this focus on your analysis. Then Mark goes on to talk about developing a winning mindset and how important that is for successful day traders. And he says that day traders, the best ones, just think a little bit differently. And I know that's sort of vague, but he goes on to say that attitude is everything. And this is a direct quote. Winners have a unique set of attitudes that allows them to remain disciplined, focused, and above all, confident that they are not susceptible to the common fears and trading errors that maybe amateurs are. So attitude is everything. How you think and how you approach your trading style is really, really important. And he goes on to talk about trading is full of paradoxes. So a paradox, if you can remember, it's a logical self-contradictory statement, just a statement that runs contrary to one's expectations. So some common ones, just to refresh here: less is more. The only constant is change. You have to spend money to make money. The only rule is there are no rules. So Mark goes on to say that there are many of these paradoxes in trading, and things that seem to make sense don't work in the world of trading. And again, this is something that might be hard to grasp when you're just starting out, but I think once you start trading and you start paper trading, and you will maybe start to notice these things happening to you, but just to be aware of them is really important. So he talks a lot about this idea of risk. So he goes on to say that trading is inherently risky. Nothing is guaranteed 100%. The risk of losing money is always there. If you put on a trade, you would assume that you are a risk taker, right? Well, the logical answer is yes. When you put on a trade, you're taking a risk, but it doesn't mean you are accepting the risk. So he goes on to talk about this in sort of great detail. And basically he says that, when someone decides to trade, they're essentially agreeing to take a risk. However, agreeing to take a risk is different from fully embracing it. Many traders enter the market without a true understanding of what it means to be a risk taker. They might recognize the risk on the surface level, but they haven't fully come to terms with the potential consequences of their actions. So successful traders view risk differently. They are not only do they acknowledge the risk, but they accept it and they embrace it. And this acceptance allows them to trade without hesitation. So when a trade is going their way and they cut their losses without letting emotions get in the way. So if they are making money and their system is in place, they'll take profits. If their trade is going the wrong way, they will cut their losses without hesitation. They embrace the risk of a trade and they totally accept it. So their ability to maintain discipline, focus, and confidence despite risks is what sets traders apart. So that's the real sort of take-home message that Mark sort of says in this part of the book. And he mentions that, fear of risk. So being scared of that risk, it's a significant obstacle in trading. If you're trading with fear, it indicates you haven't fully accepted the risks involved. Now, avoiding risk may seem like a safe strategy, but in trading, it's a recipe for failure. Success in trading requires confronting and then managing the risk head on and not running from it. So trading presents us, he says, with this fundamental paradox. How do we remain disciplined, focused, and confident in the face of constant uncertainty, which the market provides? So in order to do that, he says you need to think like a trader. You need to learn to accept the risks with no emotional pain. There's nothing to avoid. It's just information. So you really need to really get non-emotional with a lot of what is happening, which can be difficult. It's easy for me to say on a video, don't be emotional with your trading. But when you're trading real money and you see you're losing money, or you see that your profits are going up and you don't want to cut your profits, you want to see if the stock is going to rise. There's a lot of that fear of missing out or trying to make back your losses. That certainly happens, and it's easy to say don't do that, but the best traders, they really don't do that. So again, a direct quote here: the best traders, they aren't afraid. They have attitudes that give them the greatest degree of mental flexibility to flow in and out of trades based on what the market is telling them about possibilities from its perspective. They don't get reckless. So the best traders, they have no fear. They're never afraid and they are never reckless. And he goes on to talk about, these four primary fears that, some traders might get. You might be scared of being wrong. You might be scared of losing money. You might be scared of missing out. You want to put on that big trade and make, a lot of money, or, leaving money on the table. So if you have the wrong attitude about all of those things, then you will fail. So he goes on to say that, it's logical to think that you should maybe have some fears regarding the market, but when it comes to trading, your fears will cause you to act in ways that bring about what you are afraid of. And the first thing I thought of when I sort of read that was golf. So maybe you've played golf, maybe you haven't, but if you imagine you're standing there up on the tee and you're looking down the fairway, and on the left side there's this huge pond, and you say to yourself, don't hook it left, don't hook it left, don't hook it left. And you stand up to the tee and you swing, and what do? Is you hook it left right into the water. I've done that myself. And that's a lot of an example of how trading works as well. If you're scared, this is another direct quote from Mark. If you're scared of being wrong, your fear will act upon your perception of market information in a way that will cause you to do something that ends up making you wrong. So, same way as you don't hook it left, don't hook it left. Your body just does it. You swing and you focus on that. What you focus on, you leads you there, and you're going to hook it left. The same thing with fear. You're going to end up doing something to make yourself correct about your fear. So fear, it's immobilizing, deer in the headlights. You can't move. It won't let you see and understand the information that is available to you if you have fear when you're trading, when you're buying and selling various things in the market. And then the source of this fear problem is sometimes, or for a large amount, you're based on your own attitudes. And that's why it's very subtle. The thinking patterns that affect your trading, they're just based on the natural way you think. So it's internal sometimes, not external. And this is why you can't blame the market for inconsistent results. And Mark goes on to explain a very important point that, to be consistent, we need to understand how our beliefs and attitudes affect our perception of market information. So for those with, the wrong mindset, it's going to seem as if it's the market's behavior that is causing the lack of consistent results in your trades. And unfortunately, this leads you to learn more about the market, which is a trap. So you think, you need to learn everything about the market, study more about the market, study. And, there's just too many variables to consider, and the market can do anything unexpectedly. So you can't do enough market analysis to overcome the fear you have of losing money. So I'll say that again, and then we'll wrap up this video. You can't do enough market analysis to overcome the fear of losing money. So that fear is there. You got to get rid of that first. So you obviously, you need market analysis, but it's not, the path to consistent results. I won't solve the problems that come from a lack of confidence, discipline, or improper focus. So again, to be confident, you need to have trust in yourself. That's what confidence is. And to get this trust, you need to train your mind to override your natural inclination to think in ways that are counterproductive to being a successful trader. And market analysis, it's not that training. It's not market. So how do you do this? Well, basically later in the book, he talks about all the things that you can do. You need to adjust your attitudes and beliefs about trading in such a way that you can trade without the slightest bit of fear, while at the same time, keep a framework in place that doesn't allow you to become reckless. And again, later in the book, in all the other chapters, he goes on to expand on this point. So I hope that you found this video useful. I sort of wanted to talk here about what day trading exactly is, but then shift it towards this whole trader psychology, which is so important. It seems to pop up all over the time, all over the place in my initial studying of becoming a full-time day trader. So I hope that you found this video useful. Subscribe to the channel here on YouTube. And again, if you want to download my 6-month blueprint that outlines everything that I'm doing, you can find that below this video as well. I hope that you found this useful. In the next few videos, we're going to study options and then move on to technical analysis. So certainly subscribe. And again, I will see you in the next video.